Firstly, yeah, gold is very complicated, especially right now with all that's going on. Uh, the Fed pulling back, pulling away, and the markets still being quite high. Risk on being the trend for now. Physical gold still seems like very badly timed right now. If someone were to make it, historically speaking, this is where the prices have exhausted. And even though we have seen prices drop 140 130 points, $130, it's largely on a single day where the prices uh, went high as 2147 and then closed at 2028 only, 2029 only. So whatever drop that was happened within that day, within that space. So that was last Tuesday. I think it was the inflation report uh, or something uh, that triggered it. Uh, in any case, I think historically speaking, technically speaking, it's not a because physical buying physical gold. I would assume is a long term trading style, trading decision, and which is something one would hold for a significant amount of time. It doesn't seem like a right time to buy because the price is far away from the mean price of the last 3 years, 4 years. So since 2022, the price has been mostly above 1600. It's have been above 1600, mostly above 1700 also, with a brief spell below 1700 on October November 2022 last year. So that puts the mean price at 1800 or 1850 around that. So uh, it's still at 1995 $2000, so that's $150 higher. So as I said, a mean price by around 1850 would be pretty understandable. Yeah, it's a low risk and long term good investment. Yeah, that's fine. With the support being there as well, uh, technical supports around 20, 18, 1801, 1802, 1810. It's good confirmation throughout the last 3 years, 4 years, last 4 years, and multiple times it got confirmed. Obviously, that's a pretty decent buy. But the best opportunity would be around 1760 or below that. But yeah, that's hard to get, and from current prices, that's opposite trade as well. And a drop like that is very unlikely at the moment. Uh, but yeah, even a buy, I think, yeah, 1800 or 1850 even is a tough draw. uh, that's something that can be hard to achieve. So even a 1900 buy would be pretty understandable. But yeah, if above 1900 physical gold buy doesn't make a sense any sense at all, because the opportunity is much smaller. The opportunity is 2050. So gold is not going to 200 and anytime soon. I don't think, because the market is not at in that kind of risk right now. The stocks are trading at all-time highs. The indices are trading at not like 52-week highs. So that doesn't seem like a market that is in deep risk. But yeah, we know that there are risks all over the world. China is in deep trouble. The US housing sector is slowly gaining that risk factor back again. uh, the banks are in deep debt, which is about to mature in a few years as well. There is an election looming in the US. So all these things, and also a lot of different geopolitical factors going on, and which has been in this century. Even if we think about it, in this century, there have been situations or singular situations that are much more severe, severe in nature than this. But cumulatively, never I would, in this century, I think the market has been more tense, or like geopolitically tense, which is multiple countries at issues with other each other, than it is right now. So the global relations are not going smoothly. The US is also getting challenged on the dollar front, which hasn't happened in the century before. So I know, yeah, we have been hearing about the end of dollar pegged everything businesses from 2014, 2015, I think. But yeah, that hasn't seen the news, or shared the news before 2023. Now that we are ending this year and welcoming 2024, in a matter of 3 weeks, 4 weeks, I think, yeah, that's also plays some very vital role in gold's future as well. Uh, so I think, yeah, there are a lot of factors that are going on can affect gold's price. But yeah, I don't think now buying it before 1900 makes any sense, and the far below we can buy it, obviously the better. But yeah, it's 1900, 1800, and 1700. Those are the levels I think we need to watch. And if if I were trading with a 100K capital, I would buy 30K around 1900, and again add another. Obviously, these are unleveraged positions that are long dated, far long dated. This is not futures we are talking about that can expire or anything, uh, like make losses, because these are gold bars. They remain, keep their value. So I would buy 30K worth on 100K. I would buy 30K worth in 1900, another 30K worth in 1800, and if somehow it goes to 1700, I would buy the rest for 40. Yeah, I think that's about that's covers my idea of the gold market right now. But yeah, it's not certainly buying time right now. If we look about the short term as well, not short term, because there is no point looking at hourly charts when we are trying to invest on gold bars. So this is the daily chart, and with quarterly fissure, which is just breaking down, So what this tells us naturally is a shorting idea. There is no point, like I said, buying something like that. So this is an area where we can target to buy, like I said, some of it. Then if it is breakdowns, it breaks down, it's not a problem, because it will hold. It will at a certain point it will go above it, because it's gold. It's gonna retain its value. It's not going to go kaput any time in the future, at least in our lifetime. So yeah, so yeah, again, adding more at this level, adding more at this level. So that's how I see the gold market right now. Yeah, you can tell me your notes. I can comment on them. Uh, uh, anyway, yeah, thank you. Let me know. Thank you.